Good afternoon, everybody. It's Max Convexity. Welcome to the Daily Cover Caller. Everybody's lost their mind edition. Freaking Defiance. I was just on Discord and somebody posted the Defiance is doing some crazy shit now. Hang on here. I was making sure I had touching my appearance on, but yeah, it's on. It still looks kind of rough. Sorry about that. I've been sick for a couple of days. I ain't got much sleep. All right, guys, let's look at this filing. And I'm gonna try to make this fast because I want to watch Rod's. Rod has Jay on here in a little bit. I want to watch that. So here it is. Here's the filing. Okay, so it says supplemental to the prospectus. This came out yesterday. So it says effective September 26. Each fund's name will be revised. It's basically the same, but they're putting the word 0DTE in the name. Okay. But then they're also changing a few things. They're changing JEPY symbol to WDTE. So they're really sold in on the freaking 0DTE thing. So that's awesome. Then they also say they make some other changes to the prospectus, but without having the rest of it here, which is typically the next day or the upper. I kind of want to say what they're going for is a true 0DTE. And I can kind of tell by how they're revising this. Under the heading, the fund's use of index option contracts, the fifth sentence of the first paragraph revised to read as follows. The expiration dates and times of the purchase for the fund sold puts will range from the same day to a week. It's always said that. And then it says they're obligated to cash settle. No shit, Sherlock. Of course they are. These are European settled options. That's how index options work. They're cash settled. So I don't get it, but I'll make a guess on it. Let me look at one other. Here's what I think. I think they're probably gone down to where they're going to, I guess they're maybe going down to where they're going to sell options in the morning. It just sounds like the verbiage, they're trying to make this a true 0DT, which I think the way they do it now is fine. But anyway, whatever. I'm not in charge of decisions. This will make a lot of people happy. Not me, but it's not about me. But in any event, it should be interesting. Should definitely be interesting. Now, also, and I didn't see that in the filing, but somebody in Discord is saying they're going to start going with weekly distributions as well. So deck day on Monday, X on Tuesday, pay on Thursday. So anyway, that's great news for people. Just all kidding aside, I know people are excited about weekly distributions. That's real exciting. So maybe if the only thing they're doing is just the weekly distribution. So that's what the WDTE means. I mean, it means two things. It's a good symbol. It means weekly distribution, but it also means, S&P high yield fund or whatever. S&P 0DTE fund. It'd be better if it was X or SDTE. W. Anyway. All right. But it's a good one. All right. So, it says effectively immediately the fund's principal investment strategy is supplement to reflect the use of options expire on the same date. So I guess that's what they're saying. I'm just stubborn. Yeah. They're doing the round hill model. Holy shit. Okay. Well, goodbye all that money. The good thing about the way they do it is you can make 60%. Yes, there's NAV decay and stuff, but now you aren't going to be able to make 60%. Is if they adopt the round hill model, which is fine, they'll make half of that because you get paid for taking the overnight risk. I wish they would leave an overnight version up or something, but I don't know. People are selling out of those funds, and I'm pretty much the only one that likes them. I mean, their assets under management have gone down from like 300 to 200 million on triple QY and stuff. Maybe they see the writing on the wall and Anyway, congratulations, guys. That one took me by surprise. Going to weeklies didn't really take me by surprise, but going to the round hill model took me by surprise. Trying to think. I guess so. If you want more income, how do you do it now? I kind of like making 50 or 60% a year. I guess you have to go to a single stock model. You use a yield max single stock model, but if they're doing this model on indexes, it'll knock it about, knock half off the top of it. Anyway, Jay comes on in 14 minutes. I bet you Rod's asking him about yield max, but I want to ask him about this. I'll try to get a question in, maybe, or something. That's interesting. All right, well, let's do the daily update. Let's see how we finished out. Then I'll let you guys go. We can all go watch Jay, or maybe I should just live stream the Jay and Rod. Okay, let's look here how the funds did. Triple QI, the WDTE. It's a cool symbol change. I wonder if they're going to want to change these now also and make this NDTE or something. That's probably already taken. Or weekly WQND. Anyway, they're good at tickers. They'll come up with it. All right. Well, this is awesome. Triple QY dug itself out of the hole. They're no longer behind. They made $1.2 million today. They're no longer behind for the month. They're zero on. When they were behind $1, so they're behind 99 cents. Great job, guys. Dividend estimates $2.74, which is 92% yield. Let's go from here to IWMY. They made $825,000 today. They're still down 32 cents a share on the month, but the dividend's $3.08, just killing it. Let's go over here to WDTE. That's kind of weird. All right. I guess it's cool, though. I mean, all right, WDTE over here. These guys made about $500,000. But this is what I was talking about on the assets under management. $197 million, and there's been 300 recently. I don't know. What is the matter with my computer? There's 279 right there, 289 right there, 299 right there. So 299 as recently as March, January, February, March. Now, guess what happened in March? That's when Roundhill came out. Oh, my God, I didn't really think about this. I mean, I didn't think about it directly, but it's almost to the day. Let's type in XDTE. Let's type in JPY. Okay, I just want to see when XDTE came out, and it was March 7th. Holy shit. What is going on with this computer? All right, so March 7th, though, fund size. Fund size was 308 on March 1st. March 4th, it was 297. It hit 303 again. It hit 303 by March 7th. So basically, it hit an all-time high on March 7th, and it's never been back. Within a month, it was at 275. It's also, the weekly was drawing a lot of people away also, but yeah. Well, that's what happens. Way to innovate, Defiance. This fund will be around for a long time now. I'm just disappointed it's no longer going to be truly a high yield, because it's not going to be the 24-hour option where they get the overnight premium. I really like that. I predicted once this may be the highest paying high yield fund ever, Triple QY or IWMY, these types of funds. Highest paying index based. And if they're going to switch the model, and this is going to be the new model where they don't have 24-hour options, yeah, then that will forever be the highest yielding index based high yield fund if they start going with this model. So All right. Let's see what else we have here. All right. We checked all those out. Let's check USO. USOY is good because you can get some high yield dividend typing, or not dividend income, but option based income without exposing yourself to to the stock market as much, right? Because the underlying is oil market. Now, the bad news is the oil market is still highly correlated to the stock market, but it's not as correlated as the stock market itself is. So here, let's prove that. We're going to check the correlation of SPY, USO, and then we'll check JEPY. Okay, so one means it's perfectly correlated. So JEPY is a 95. It's 95% correlated with SPY. USO is a negative 0.04. It means it's very uncorrelated. So it's a good diversifier. They don't go the same direction often. If it's highly negatively correlated, what that means is like, and if we put UVXY on here, that's a long volatility fund that makes money off volatility going up, which happens when the market goes down. So that's highly inversely correlated to the SPY. Well, so people use those types of assets to hedge directly, but you can hedge indirectly by not loading up on SPY, by using other investments like USO and JEPY that are less correlated, and therefore give you more diversified results or whatever. But anyway, also over here we can see the annual standard deviation. Interesting to notice that out of all these, the least risky out of every fund there is JEPY. Its standard deviations is about a third less risky than the oil market, or about half as risky as the oil market, and about a third less risky than the stock market. Well, and that's because of the option selling strategy, bringing in an income, and the income lowers the volatility. It helps out during the losing times, but it also hinders you a little bit during the bullish times. So overall, it just cuts the highs and the lows down. Okay. Now let's go over here to let's go back over here. So USOY is definitely the fund of the day. Maxi's looking really good. Look at that. Of course, YBTC is looking good. Let's see what else we have. ULTY, nice bounce back today, guys. I keep saying I'll take iSpy off here, but I haven't yet. All right, well, let's see how the normal ones finish up. SPY-T got about 3/4 of the upside. JEPY got about a little more than half the upside. JEPI got about 1/4 of the upside. SPY-I got about 3/4 of the upside. XDTE got all the upside. Not for long. Defiance is going to start getting a piece of that action too, I guess. All right. SFAL. SFAL, SFAL is lagging, but it's so steady. It always makes a little bit, even on down days. ZIVB lagging a little bit, but it's also pretty steady. Look at KQQQ. Now, that's what I would call a more high-power type fund. And sure enough, so we would expect that type of fund, and also like GPIQ to be up today. ULTY I would call high power, just meaning volatile, meaning it's either going to be up a lot or down a lot. All right, well, not bad. Not bad, guys. All right, so let's look at some charts here. Let's talk about the volatility model. I forgot to mention that on the noon update. I'm sorry. Hope I didn't erase it. That's what happens half the time. I think I erased it. You got to be kidding me. Oh my God, you got to be kidding me. It's gone. Is it gone? Maybe not. Oh, there it is. Okay. I hate because I've done that twice and had to rebuild the whole thing, and it's a pain. Okay. Volatility model is double positive. Well, I'm sorry, I shouldn't say that. The longer term is positive. The shorter term, the longer term is negative, though, based on the daily bar charts, despite the fact that on the shorter term time frame, signified by these little boxes here, the momentum has turned bullish. If the shorter time frame keeps in this direction, eventually the longer time frame will turn also. It's easier to turn the shorter time frame than it is the longer time frame. That's just kind of the way it works. The shorter time frame can be thought of as an early warning signal. It can also be thought of as a false alarm lots of times. Lots of times it gives you signals that are really just counter trend rallies that ought to be sold when the primary trend comes back in, and but we'll see. But the thing that makes the market interesting, and it's different every day. It's been different every day for my whole life, and it's a puzzle trying to put together the pieces to figure it out. This is one of this type of thing right here. Timing momentum model is one of many things I look at. But the last time that the model went green, even though the longer term model was red, it was actually a nice counter trend rally. The SPY went from 532 to like 557 in about 20 trading days. That was from August 12th to September 3rd. And I'm not saying that's going to happen again, and we've started it again. This could be a false alarm and go the other way tomorrow. But we'll keep following it and see what happens. We'll see what happens. I'm going to look at the daily volatility here. I'm going to see what it looks like. Yeah, I mean, it's still a ways from changing on the daily volatility. It appears to be. I mean, anything can happen. So the daily volatility, you can see back here, I zoomed out, it gives longer term. It's the larger boxes. It gives longer term, slower signals, trend following signals. It's hard. I know it's hard to see, but this right here is a bar chart of the SPY. So you can see where the SPY was and where it went to, and then as the signals changed. So these are all longer term signals right here. But then just these ones that are inset here for the past, month, I went back and, because like I said, I had this constructed further back, but then I erased it. It's a lot of work to go back and reconstruct it. It's a rules-based model of different rules and stuff. All right. It's 1 minute till Retire on Dividends interview starts. You guys go watch it. I want to see what Jay has to say for himself. All right. See you.